Hello traders, Gary Wagner with the Gold Forecast here. It is Wednesday, approximately 9:30 here in Honolulu, Hawaii, the 12th day of December, and this is the Daily Report. Gold has been trading sharply lower today, currently trading off about $18. It is trading at 1380, 1381. On today's report, we will talk about areas we will look at for the market to find support and recap the last trade that we just exited yesterday, all on today's Daily Report. Traders, I'd like to start by recapping the trade. Of course, we did pull profits yesterday. We did exit our long position at 1395, 1395. We moved our protective stop up. That stop was in fact hit. So for traders who took the call directly, we bought in at 1354. We got out at $13.95, $41 profit. Nice, smooth, easy trade. I am very pleased with it right now. When we saw the engulfing bearish yesterday, my sentiment was that this trade had been a fairly flawless trade for us. Why take any extra heat? Let's get out of the market. Let's pull our profits. Let's regroup. Let's see where the market wants to trade to, and let's strategize together so that we can make yet another profitable trade. Traders, this of course is our daily chart of spot gold or forex gold. We can quite clearly see the pennant formation or the breakout. Of course, our buy signal right in here, which was our Three River Morning Star. Our engulfing bearish, which was our exit strategy right in here. I do want to, as we have been lately, turn that into our Henkin chart. But I do want to do that with a caveat. And the caveat is because it is a average based chart, that it's really going to always lag a little bit behind both Fibonacci as well as candlesticks. Candlesticks and Fibonacci tend to be more leading indicators because they are really good reversal indicators as far as the candlesticks go. And the Fibonacci, we're looking for points prior to the market actually reaching there. But I think you can quite clearly see on the Henkin chart that we have had a basic turnaround. Now, we had these candles that came in, the fact that they had no lower wicks or tails, that's what's critical, and that the candle size is getting longer. That's really what you want to look for. Now, as soon as we witnessed a candle which had a lower tail, now this is the engulfing bearish where we got out the other day, that's the first sign that the trend is weakening. And of course, as it moves to a red candle, as we see here, that gives us an indication that we've now entered a downtrend. Now, how far is that downtrend going to take us? As you can see on prior retracements, you've had at least a series of days in which the market traded lower. Right now, the talk is the fact that China is rumored to, or alleged to, I should say, rumored to, going to raise their interest rates again this weekend. And if they in fact do, that could create some more downside pressure on gold. Now, where is it probable that we will find continued support and re-enter from the long side? For those of you who have joined me within the last month and have been around for one or two trades, just to give you a better idea of my trading methodology or style, as long as I remain bullish, and I am absolutely bullish, I believe that I look for key points to buy and enter the market, and then strategies, as you see from yesterday, to exit the market. But I typically do not sell this market short. For those that are real aggressive, you do have a sell signal and you can go ahead and do that. I am not going to chart it, nor am I going to consider it part of my trading strategy. But the one thing that we do want to look at is different areas of support. Now, to do that, I'm basically pulling up a Fibonacci retracement. I'm going to do it on a 240-minute chart and a daily. This is first the daily, and we're taking it from the low and the high right in here. And as you can see, right now it seems to be kind of set at that 1380. That 1380, of course, is a 23% resistance level. The next big point is going to be 1352, and that's the 38% level. Now, traders, this is the 240-minute chart that we have been following, and I use this to plot channels. In other words, as the market trades, it typically will trade into a channel, move up or down, and then fall back into a channel. But as you can see, we have completely at this point fallen out of bed. There was a point last night when I believed that, which is why I've got this line highlighted, I believed that this particular line was going to be our channel line, but then we breached that and we fell even lower. Right now, 1365, 1377. So that 1377 to 1380, which of course corresponds to the record top that we had prior to it hitting 1324, that's going to be a point I want to see if it holds. I have no clear indication at this point that we've reached any kind of tentative bottom. Because of that, my recommendation right now is to remain on the side. We want to take a serious look at the market, look for signs of consolidation, and look to see where the market wants to consolidate in terms of logical Fibonacci levels. We have a good trade under our belt. I am more than patient to take the next stab into the market. And then lastly, I've gotten great response from people that do want to subscribe to the silver forecast that we will be starting at the beginning of next year. I will be sending out emails to those who have already corresponded to me and expressed interest. We'll go ahead and we'll set up something so that you can pre-order the silver forecast sometime over the next week or so. Anyways, I had two basic targets. The targets that I was looking at for silver was 3178 and then 3052. I think you'll see that it's kind of interesting that in fact it came right to this one level, and this of course is simply based on a Fibonacci extension. Again, I am going to be looking in these channels once that market finds support. Tentatively, I'd look for it to find support somewhere around the handle, and that handle is going to be right in here. It's going to be probably around $28 per ounce, but we'll have to see. Again, for those of you who are interested in pre-subscribing to the silver forecast, please send me an email, and within a week or two, I will send you details on cost and availability to go ahead and pre-enroll in that particular newsletter. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow. Bye-bye.